or buy. Let me tell you why. Hey guys, it's me again, Ruby, your investment guru. Last week's episode, we delved into Metro Bank's finances. Today, we will tackle another company that has been with us for the last 123 years. This company has stood the test of time and has been part of our history. Get ready as we dive deep into Manila Bulletin. To take a look at the glory that was Manila Bulletin, let us bring in our correspondent, Ann Ates.
Manila Daily Bulletin, a four-page shipping publication founded on February 2, 1900, was a precursor to Manila Bulletin. Carson C. Taylor was its founding father, and H.G. Harris was its editor and only staff. Giving the public accurate and trustworthy shipping and business information on companies was initially its primary purpose. In order to prove its worth and encourage the public to rely on it for information regarding the arrival and departure of ships, mail, and other services, it was made available free of charge to anyone who would take it.
When it gained popularity and established its audience in 1904, it was finally placed on a subscription basis. It rapidly expanded as the advertising industry thrived and transformed into a general newspaper in 1912 to include news of general interests. In 1957, Taylor sold the company to Menzie and Company Incorporated, handing over publishing responsibilities to Swiss-Filipino industrialist Brigadier General Hans M. Menzie. Under his direction, Manila Daily Bulletin adhered to his tenet to remain as an exponent of Philippine progress. Manila Daily Bulletin came out every day until its two-month hiatus in 1972. This was the result of Proclamation Number 1081, which declared martial law throughout the nation and shut down a majority of newspapers. It relaunched under the name Bulletin Today, making it the only one of two newspapers allowed to be published during that era. After the passing of General Menzie in 1984, ownership and control of the company was transferred to philanthropist businessman Emilio T. Yap Sr. as the new chairman. The publication then expanded to add numerous other periodicals including Panorama, Tempo, and Balita. Following the People Power Revolution that ended martial law in 1986, the corporation renamed itself the Manila Bulletin Publishing Corporation and its broadsheet, the Manila Bulletin. In 1990, the corporation became publicly listed on the Philippine Stock Exchange and is the only major daily listed on the bourse as of date. The business celebrated its centennial year last 2000 and continues to innovate and reinvent its operations to keep up with the ever-changing industry. The Manila Bulletin Publishing Corporation publishes a range of newspapers and magazines in multiple languages. It views journalism as a tool for fostering a just and fair society where citizens love their country, work together for the common good, prioritize the people's interest over self, and thereby contribute to a society where all citizens enjoy prosperity and progress fairly. Its mission is to provide accurate and objective news about the Philippines to Filipinos, both within the country and overseas. They aim to deliver news without bias or advocacy for individuals or parties, focusing solely on presenting ideas. Their approach is to maintain a positive tone in their coverage, promote constructive rather than destructive narratives, encourage positive behavior, and fearlessly report on abuses and dishonesty. Ultimately, their goal is for their media outlets to be instruments of construction rather than destruction while fulfilling their critical societal role. The company's ultimate beneficial owner is Mr. Basilio C. Yap, the son of the late Emilio T. Yap Sr. He has 0.15% ownership of the firm and the chairman of the board of directors for the year 2022 to 2023. Basilio is also the chairman of the U.S. Automotive Company Incorporated, Manila Bulletin's major stockholder with 54.25% interest, and its subsidiaries Cocosville Development Corporation, Phil Trust Realty Corporation, UN Properties Development Corporation, and Centro Escolar University. Moreover, he is a chairman of U.S. Auto Company Incorporated, another stockholder of Manila Bulletin owning 23.40% interest, and its subsidiary, Manila Prince Hotel Corporation. Other elected officers include Dr. Emilio C. Yap III, nephew of Basilio and the vice chairman of the board and president, as well as retired Supreme Court Chief Justice Hilario G. Davide Jr. and former Secretary Alberto G. Romulo, both as vice chairman and independent directors. Shown are other executive directors and officers of the company. The Manila Bulletin provides high-quality news and entertainment. It is released 7 days a week, plus Sunday issues of Philippine Panorama magazine and quarterly issues of Digital Generation magazine. Tabloid newspapers Tempo in English and Balita in Filipino are also published daily. The Manila Bulletin also publishes bi-monthly full-color magazines of specialized interest that are aimed at different reading public segments, namely Agriculture Magazine, Going Places Magazine, Animal Scene Magazine, Liwayway, Bisaya, and Banawag. The Manila Bulletin's business model is summarized in a one-page blueprint shown in the business model canvas. We will go over each component one at a time. First, we have key partners with whom the business collaborates to enhance its value proposition and are critical for flawless business operations. Its major suppliers are Golden Dragon International, P&M Korea Corporation for newsprint, Sun Chemical Corporation, Heritage Inc.'s International Corporation, and Toyo Inc. Corporation for ink, and Aboitiz for power. Because of the volume of newsprint, ink, among others, and quality required, Manila Bulletin buys only from big, reliable suppliers that can deliver the volume and quality of materials required. The company does not have an exclusive or major contract with any of their principal suppliers. The business also forged a partnership with their columnists and editors, as well as their investors. Principal stockholders who own more than 5% of the total outstanding shares of capital include U.S. Automotive Company Inc., U.S. Auto Company Inc., and Menzi Trust Fund Inc. Second are the customer segments, which are split into two major segments: advertisers and readers. Advertisers include the business sector and the general public, while readers include professionals, business owners, special interest communities such as travel, agriculture, and animals, and every current event enthusiast. Next are the value propositions, which highlights both the company's commitment to fair and timely news to the public and its strong suit in advertising. Its key resources include tangible properties such as real estate, machinery and equipment, technology, and human resource. As of December 2022, the company has a total manpower complement of 300 employees. The key activities that the company carries out are: customer relationships are fostered through the following. Manila Bulletin reaches its audience through various distribution channels including printed publications, their website, numerous social media platforms, and their mobile app. The company's revenue streams are from two primary sections, which are circulation and advertising. Its cost structure prioritizes cutting expenses whenever possible. The cost drivers under its cost-driven strategy are expenses on publishing and printing operations, human resources, infrastructure, and research and development.
Welcome, Shirley from Finance Consult.
Hello, Ruby.
How are you feeling today?
I'm great.
So, Shirley, what do you think are the challenges that Manila Bulletin has faced?
Manila Bulletin's challenges is the change in sales trend attributed to the shift of customer preferences, as well as a worldwide economic shutdown due to COVID-19. Right now, Manila Bulletin competitors are not only publishing companies, but also from the digital platforms.
Follow along as we examine the company's past financial position and performance to gauge its viability, profitability, and stability. In this section, we will go over some crucial ratios to help us understand Manila Bulletin's past financial data and to be the basis of our forecast. First, we'll assess its liquidity. Looking at its current and cash ratio, Manila Bulletin's current ratio has been improving from 2015 to 2022. From 1.51, it went up to 2.95, indicating that the company is becoming more liquid with time. However, its cash ratio is constantly low. From 0.026 from 2015, it went down from 0.019 to 2022, indicating that it is liquid only due to other current assets. Next is its accounts receivable and days outstanding. The receivables turnover ratio showed a steady decline from 2015 to 2022. From 1.34 in 2015, it went down to 0.39 in 2022, indicating with an increase in the number of days it takes to turn over receivables into cash. This suggests that Manila Bulletin is facing challenges in collecting payments promptly, which can have implications for its cash flow and financial health. Next, we'll look into its solvency. The debt-to-equity and net debt-to-equity ratios of the Manila Bulletin have historically increased. The goal ratios of 45% debt-to-equity and 43% net debt-to-equity were successfully maintained. If not, the debt will immediately become due and demandable. Lastly are the profitability ratios. Return on equity for the business have been deteriorating. Looking at its equity multiplier, it went down from 1.87 in 2016 down to 1.56 in 2022. Looking at its asset turnover, it went down from 0.39 to 0.13. And lastly, looking at its return on sales, it went down from 0.017 down to 0.0060 in 2022, indicating that all of DuPont's metrics for profitability, asset turnover, and financial leverage decline. Now let's go to earnings per share. Earnings per share of Manila Bulletin dropped from 0.039 per share in 2015 down to 0.013 per share in 2022. This suggests that the company is less profitable on a per share basis, which can impact its stock price and investor confidence. Since 2015, the book value per share has grown also by 5%. This is normally a good sign, indicating that the company's equity is increasing. However, given the little increase and unfavorable findings on other ratios, this may not be sufficient to indicate improved financial health. Now let's look closely into its economic analysis. Due to the Philippines' strong economy and growing digitalization, the advertising market is characterized by a dynamic environment. While print, radio, and television remain important forms of media, the widespread use of smartphones and social media has led to a considerable increase in digital advertising. The focus of internet advertising is changing as companies try to appeal to tech-savvy customers.
Furthermore, to effectively engage the diverse Filipino community across multiple places, distinctive and culturally appropriate advertising activities are needed. The Philippines advertising market was significantly impacted by the COVID-19 pandemic. Economic uncertainties and changes in client behavior prompted budget cuts and changes in advertising methods. Advertising spending fell in industries that were directly harmed by lockdowns, such as tourism and hospitality. However, the value of digital advertising increased as online engagement increased. To adapt their messaging to the context of the pandemic, brands had to emphasize social responsibility and empathy. While Manila Bulletin has not, some of its rivals like Inquirer.net and Rappler have already adapted to the constantly evolving market trend of digital media. An analysis on its financial statement shows that it has not made any significant investments towards the future. As per Statista.com, it is predicted that the Philippines advertising market will generate a total of 561.3 million US dollars in revenue, or 20.73% growth between 2023 to 2027. The indicator is anticipated to reach 3.3 billion US dollars and hence a new peak in 2027 after the seventh year of increasing trends. This is around 4 to 5% annual growth for the next 5 years. Digital media is slowly posing a threat to traditional media outlets like print media in the current media industry scenario. In the Philippines, newspaper advertising made up 3.6% of the market in 2018, a steady decline from 2012. The sector is expected to experience a 7.7% decline by 2024, or about 2.6% to 2.8% market share in 2023 to 2027. With this data, the experts forecasted an average increase of around 3% on advertising revenue of Manila Bulletin. This is despite its declining rate since 2015. Most of the increase is attributed to the total increase of revenue in the media market and considering its share in the newspaper segment.
So welcome, Louie. Thank you, Ruby, for having me here. So my question for you is, where do you think Manila Bulletin is heading?
We know that digital media is on the rise. Looking at the figures, it would seem like Manila Bulletin will continue with its downward trend. It may or may not be able to bounce back, depending on its ability to.
Finest Consult used historical data from 2015 to 2019 to better analyze the movement of accounts in light of the anomalous figures on the financial statements on 2020 to 2022, which can be attributed to the COVID-19 pandemic. For its circulation revenue, the consultants used the compounded annual growth rate or CAGR for 2015 to 2019 of around negative 13%. Although companies expect that the election spending will deliver economic boost, we still see the same declining rate for the company on the Philippine midterm elections by 2025. This is backed up by the historical data of Manila Bulletin last 2022 during the presidential election and 2017 during midterm elections. Through both historical and economic analysis, we were able to estimate Manila Bulletin's future financial outcome. Most assumptions were made using vertical and horizontal analysis for the covered years 2015 to 2022. Shown are the assumptions made. Now let's look into its forecasted income statement and balance sheet for the years 2023 to 2027. Let us look at as follows. Following the completion of the projections, we will now evaluate the changes in the company's liquidity, solvency, and profitability. Let's look closely to its forecasted financial analysis. First up is its current and cash ratio. It is expected that the current ratio will continue to increase from 1.021 to 1.169. Moreover, Manila Bulletin will still have a low cash ratio, which will be 0.012 in 2027. It is also predicted that a steady decrease in receivable turnover will continue in the next 5 years. Its peak will be on 2027 at 0.37 turnover or 720 days. For its forecasted debt to equity and net debt to equity ratio, owing to the payments that the company will make starting 2023, its debt to equity and net debt to equity will continue to decrease from around 33 to 34% in 2023 to 11 to 12% in 2027. DuPont's metrics on profitability and financial leverage will decline and a slight increase in efficiency can be observed. In 2023, return on sales is at 1.46 and declined to 1.23 at 2027. Meanwhile, Manila Bulletin's asset turnover will slightly increase from 0.132 at the start of 2023 to 0.133 in 27. Lastly, its equity multiplier is anticipated to decrease from 0.062 to 0.059 for 2023 and 2027 respectively. Looking at its earnings per share, up until 2027, the earnings per share are anticipated to fall. By that time, there will have been a 0.011 earnings per share from an earnings per share of 0.013 in 2023. Lastly is its book value per share. The book value per share of Manila Bulletin will slightly increase from its lowest at 1.059 per share in 2023 to 1.105 per share in 2027. The growth is attributed to the increased retained earnings. In conclusion, Manila Bulletin's future is not particularly bright. Its market share is steadily falling as well as its assets. It is yet to leverage the opportunity on going digital. Despite the fact that the company has a significant amount of receivables, which suggests that it may eventually receive cash, the age of these receivables is a cause for alarm. On the contrary, it has amassed sizable amount of PPE, confirming its solvency. As per the Philippine Stock Exchange, Manila Bulletin's market value was priced at 1.20 per share in 2019 and dropped to 0.24 per share by December 2022. In comparison to its earnings per share during the same time period at 0.007 per share in 2019 and 0.013 per share in 2022, the share deterioration is clearly pretty obvious. As of October 19, 2023, its market value has decreased further to 0.22 per share. At the end of 2023, expected earnings per share amounts to 0.011. Looking at the numbers, Manila Bulletin is clearly overvalued, which makes it a good sell opportunity. Given its past and possible economic difficulties in the future, it might not be able to sustain its operation in the long run. It is important to scrutinize business to determine whether the benefits outweigh the risk of investing. As consultants, we advise purchasing discounted stocks only if they are of the right price and high quality.
Manila Bulletin has been a big part of the publishing industry, and as we also know, the digital world has really affected this industry the most. Manila Bulletin, to buy or to buy? I would say buy for now and let us see if they can catch up in this fast-changing digital world. How about you? Would you give Manila Bulletin a buy or a buy?